Hey traders, welcome to the YouTube channel. So if you need a clearer view of where to enter your trades or you struggle with support and resistance, I've got you covered. Have you ever heard of the Fibonacci retracement or extension tools? If not, then this is a game changer and it will give you a bit of an extra edge in your trades. My name's Alan. I'm the CEO of the Divergent Trader, where I help hundreds of traders become consistently profitable. I'm also the author of the book, The Blueprint to Trading Psychology. As well as that, I have a huge following, over 400,000 followers across all my social medias. And I've been a full-time trader for over 5 years now, with 10 years of experience in the market. So at the end of this video, you'll be able to apply the Fibonacci tools with confidence and give yourself that extra edge in the market. Don't forget to like, subscribe, and hit that notification bell. Okay, so what is the Fibonacci retracement extension? So it's based on the Fibonacci sequence. What this is it's a sequence in which each number is the sum of the two preceding ones. So for example, here we've got 0 and 1. If we add them together, what does it create? It creates 1. Okay, what if we add 1 plus 1? That's 2. If we add 2 plus 1, what's that? 3. If we add 3 plus 2, what's that? 5. And that's how it goes. It goes on and on and on. And it's named after the Italian mathematician Fibonacci. We can make squares and widths with these in a nice spiral. You see this happen a lot when you look at Fibonacci retracement extensions. It always comes up with all these little spirals. And that's because it all happens in nature, or you'll see it in the stars, the galaxy formation, you'll see it in shells, the symmetry. Basically, it happens all over. So someone had the smart idea thinking, okay, if it happens in nature, then it probably happens in the stock market. And it actually does. We have a mass psychology where we tend to all look at these certain levels to take profits or enter trades, and it can be a place to look for sniper entries and things like that. So how does the Fibonacci retracement work in trading? So it can be applied to the charts, and it can provide you with potential support and resistance levels. So once you draw out your Fibonacci, you might notice that price reacts at these certain levels. Okay, so how to use the Fibonacci retracement and extension tool in your trading? You know the sequence now. So there's a golden ratio everyone uses. It's the 618. Okay, so 1.618 if you're looking for a reversal. If you're looking for a retracement, it's just a 618. And again, this is found by dividing the number in the sequence by the 1 before it. The ratio is important because this is the most commonly used ratio after the 50%. An interesting thing as well is the 50% isn't actually a Fibonacci number. Everyone always presumes it is, and actually it's not. It's just a psychological level. So when you take out your Fibonacci, these are the levels that you'll see. Some of the most commonly traded ones is the 382. These are like short retracements. But if you're looking at a trend, you use a retracement tool, the Fibonacci, and the 382 is a short pullback, the 50% is a medium pullback, a healthy pullback, and then the 618 is just a little bit more extended, and these can provide really good risk to reward trades. And then obviously there's 100%. So if you apply this to a trading chart, you can figure out the support and resistance for the trend reversals on either side. So going short, you can find areas of value. If you're going long, you can also find areas to trade at as well. So how I use them? So in a trend, I use the 50 and 618 specifically for retracements. For reversal points, I use the 1.272 and the 618, 1.618. Also, another little technique that I use is the 50 fib entry, which I'll cover in a second. So what is the logic of using the Fibonacci? Well, it's to identify support and resistance areas, and you can look for the 382, 618, and for the support and resistance areas for uptrends and downtrends. Before we go to the charts, just a bit of a warning about using the Fibonacci trading. So it's not a guarantee. It's only a tool to help you anticipate potential support and resistance areas. You don't want to rely solely on that Fibonacci, okay? You want to use other technical indicators to add value to it. And the best ones to use is price. You want price, support and resistance, liquidity levels, things like that. When you combine that, it really increases the odds. Next thing I like to use is Bollinger Bands. That's another one. And the last thing you can use is both. So let's get to the charts. I'm going to show you exactly how to use the Fibonacci tools and some other ways that you can use them too. So on the left, we've got Fibonacci extension. This is used for either reversals or you can use it for trade management. I tend to use it just for pinpointing reversal entries. On the right, we've got the Fibonacci retracement tool. And this is mainly used for when you're in a trend looking for retracements. So we'll go over the retracement tool. What we want to see is price retrace into one of these levels in a trend. So say we're going in an uptrend and price has made a new high after breaking structure. We want to see it retrace either to the 50%, or the 618. These are the levels that tend to work the best. I know a few traders use the 0.382 level, but they're just shallow pullbacks, okay? Plus, when you get a big, strong pushback, retracement into this 50 or 618 levels, you've got more room to the high. So you've got more risk to reward that you could potentially go for. So if you were to enter round about here, you can target the high there, because that's going to act as the next resistance point. So you can get a decent risk to reward. So let me just show you. So we've got a high, a low, a higher low, a higher high, a higher low. Okay, this is what a trending market does. And what you want to do is you get your fib out and you measure the retracements. All right, so you measure from the high to the low. I like to use the body to the body. I don't like to use the wicks. You can see here from the low to the high, we can look for that 50 to 618 retracement. Now, what I said before in that earlier video is you want to add extra confluences to it. So in the case of a trend, you can use support and resistance. So you can see this 50, 618 level aligns with previous resistance here, this support area, sorry, here. You've got the Fibonacci, you've got the support area, and now you're in a trend. So there's a good chance it will react here and keep on going. So what should happen is price should come into this level and then retrace and make a new high, because if it's in a trend, it makes lower lows, higher highs, lower lows, higher highs. So this is how you can look for retracement using that fib retracement tool. Okay, using the Fibonacci extension, the levels that I like to use on this is the 272 and the 618 level here. So I'll show you what would I be looking at it here. So what I look for is reversals using this one. So let's say price is gone and made a real overextended push up, okay, and then it pulls back and then goes up again. Okay, because the price is really overextended on this first move, it's showing that it's getting overextended. There's a good chance it's getting ready to reverse at some point. So what I'll do is I'll measure from the low to the high of the impulse and then bring it back. So basically what it is, it's A to B and then back down to A, the starting point. And what tends to happen is price will come up to one of these levels, 272 or the 618. And then tend to reverse. How I use this with other confluences is I'll look for divergence. So if price is making higher highs here, just let me make it look a bit neater. Like so. On the RSI, on this little tool down here, it might be making lows. So I know there's a divergence. I know that there's the fib level here. Plus, if I look to the left, maybe there might be a previous liquidity area that's resting and it just gets taken out from the peak. So that's how I like to use it, okay? And I'm going to go to the charts and show you how to use it. So we'll go over the Fibonacci extension tool here. So you can see price has made a strong push up. It's making straight linear moves to the upside, okay? So when I notice this, I would take my Fibonacci extension tool, measure from the low to the high, and then back down. Okay, we wouldn't be able to see this just yet. Okay, so if I just draw a line here, this is what we'd be seeing right here, only this. So I'd measure from the low to the high and bring it back down to the original starting point. And then I'd be looking for areas up here to trade off. And it comes to the 618 up here and it actually rejects perfectly. And another confluence I like to use is that fib. And you can see it comes outside that Bollinger Band. And if we go to the RSI, you can see that we do have divergence, just like I said previously. So we've got that Fibonacci confluence, we've got the RSI, and if we look to the left, maybe there's something that's going to be helping us as well. Here's an example of using it for that 272. So what I've done here is measure from the low to the high, and then it's pulled back. And then you can see it comes to that 272 and reverses perfectly. And if we go to the RSI, we've got divergence. And I don't know if there's a bit of liquidity resting here, but that got taken out. So, but yeah, if there was a liquidity point to the left, that would really help increase the probability of the trade. So that's how you can use it. So here's an example of using the retracement tool. So our trend is making higher highs, higher lows, and this circle is where the 50% retracement is. So if we measure from the low to the high, we can see it comes into the 50% area here. Does have a reaction. I mean, on a lower time frame, you could look for this and this would be a big move. What you could also look for is price to come into this support level here. And it does come in and has a little reaction and then breaks down a little bit more and then eventually goes up. Didn't work as perfect as you want it to there. Let's just try and find something else to show you. Okay, so now we can see we're in a trend on here. Price is making higher highs and higher lows, like so. and it's gone up. So it's not always going to be that perfect schematic of what I showed you previously. But overall, we're in a trend. If you want an objective way of doing it, you can use the EMAs as well. That's also a good confluence you can use. If it rejects the fib and it rejects an EMA and it rejects support and resistance, adding all these things together really, really helps. But yeah, we can see we've got this strong impulse move that breaks this previous structure right here. Okay. So when this big move was created, what we can do is get the Fibonacci tool, measure from that low to the high, and then wait for it to retrace into that golden zone. And we can see it comes into that 50% 618 area. They're very close, okay? So I see it more as a zone, an area I want to be looking at. And you can see it perfectly comes down and then pushes up. And it just misses previous support here, actually. So if that would have rejected here and it had come out inside the Bollinger Band, that's how I can create a case to look for this trade. Let's look left to see if there was anything. Oh, yeah. Oh, brilliant. So you can see here, previous support. So we've got an area value here. So what's happened? We're in a trend. It's made a new high. It's retraced into previous support. It's rejected the 618 50% area. This is where we can start looking. And it's rejected the Bollinger Band, sorry. What you can do then is could maybe go down to a lower time frame, look for the sniper entry, things like that. Lastly, once the market starts getting a bit overextended, we can start looking for that Fibonacci extension. So let's see if it works here. Okay, let's just say we can do from the high to the low here. So it doesn't quite come to the 618, but eventually it does on there. But that wouldn't be how I'd drawn it. Here's a good one. I think this would be the 272 level. So if we measure from the low to the high and bring it back, you can see perfectly rejects that 272 level up here. Nearly pinpoint perfect. So if we look to the left, does it come into a bit of support area, but what I'd like to see is it to come over and just take out that liquidity area. That'd be perfect for me if I'd have seen that. But yeah, this is how you can use the Fibonacci tools to help you pinpoint your trades a little bit better. So thanks for watching. And if you want to remove as much emotion and automated trading as much as possible, I'd recommend watching this video next. And also don't forget to like, subscribe and hit that notification bell. And I'll see you soon. Bye-bye.